Every major financial crash in the last century follows a predictable sequence, and before each one, the world's wealthiest investors make 3 secret moves, not 2 moves, not 5, exactly 3. In 1929, Joseph Kennedy made these moves. By the time the market collapsed, he walked away with tens of millions while everyone else lost everything. In 1987, Tudor Jones executed the same 3 moves and made $100 million in a single day when the market fell 22%. In 2008, Michael Burry, John Paulson, and others followed the exact same sequence. They made billions while the financial system imploded. And in 2025, Warren Buffett, Ray Dalio, and Bill Ammon are making these same moves right now. These aren't guesses. They're mechanical moves that exploit the same repeating pattern of crashes. Today, I'll show you exactly what these 3 secret moves are, how they played out in 1929, 1987, 2008, and why they're happening today. Move 1: Cash conversion. Protects you from forced liquidation. This is the earliest signal. It happens 12 to 18 months before the crash. In 1929, Joseph Kennedy, a stock speculator who'd manipulated prices for years, recognized that the market was dangerously overvalued. Stocks had tripled in 5 years. Margin debt was at record highs. Kennedy began converting his positions to cash steadily. By September 1929, he was mostly out 7 weeks before Black Thursday. In 1987, Tudor Jones noticed valuations soaring, with program trading amplifying risk. He methodically reduced stock exposure in August and September, converting to cash, raising warnings to investors. When the crash hit October 19th, he was fully protected. In 2008, Michael Burry started raising cash in 2005, seeing the housing bubble early. John Paulson followed in 2006, preparing for the collapse. Warren Buffett increased Berkshire Hathaway's cash from $40 billion to $60 billion by 2007. They all exited in time, shielded from the carnage. And right now, in 2025, Buffett holds $325 billion in cash, the largest corporate cash position in history. Jeff Bezos, Mark Zuckerberg, Jamie Dimon selling across corporate America is at levels not seen since 2007. Move to gold accumulation preserves wealth against currency devaluation and inflation. Cash protects you, but it loses value when currencies devalue. Gold preserves purchasing power. In 1929, Bernard Baruch bought physical gold. When Roosevelt devalued the dollar in 1934, his gold appreciated 69%. In 1987, Jones held gold alongside cash. When panic struck, gold surged 58%, shielding wealth during maximum market fear. In 2008, investors like Paulson and Burry bought gold during the financial crisis. Gold climbed from $600 in 2007 to nearly $1,900 by 2011, tripling wealth for those who held it. And right now, in 2025, central banks bought over 3,000 tons of gold in 3 years, record highs. Billionaires like Ray Dalio and Stanley Druckenmiller are actively increasing gold exposure. Gold trades at record levels. Move 3. Volatility positioning. Profits from the crash itself. This is the profit move. It requires instruments that pay off when markets crash. In 1929, Kennedy shorted stocks. When prices collapsed, he made $15 to $50 million. In 1987, Jones bought thousands of put options on stock index futures. When the Dow fell 22.6% on October 19th, his puts exploded in value, netting $100 million in a single day. In 2008, Burry and Paulson used credit default swaps on mortgage bonds. They paid small premiums for years, collecting billions when the housing market imploded. And right now, in 2025, credit default swaps on commercial real estate are spiking 300 to 500%. Institutions are buying put options on indices. VIX calls signal bets on rising volatility. Billionaires make their money. This is the profit move. It requires instruments that pay off when markets crash. In 1929, Kennedy shorted stocks, collecting tens of millions when prices collapsed. In 1987, Tudor Jones bought thousands of put options on stock index futures. When the Dow fell 22.6% on October 19th, he made $100 million in a single day. In 2008, Michael Burry and John Paulson used credit default swaps on mortgage bonds. They paid small premiums for years, and when the housing market imploded, they collected billions. And today, in 2025, billionaires are actively executing Move 3. Credit default swaps on commercial real estate have spiked 300 to 500% in price. Institutional investors are buying put options on major indices. VIX call options are surging. All signals point to one thing. The smart money is positioned to profit from the next crash. Move 1 protects them. Move 2 preserves wealth. Move 3 makes them money as markets collapse. How crashes work and why these moves work. Every crash follows the same sequence. Bubble. Asset prices far exceed fundamentals. Euphoria. Everyone believes prices will never fall. Maximum leverage. Investors borrow excessively to chase gains. Trigger. A small event sparks panic. Forced liquidation, margin calls, forced selling, prices collapse. Panic, fear dominates, liquidity vanishes. Markets crash 20 to 50% in weeks. Move 1 protects from liquidation. Move 2 preserves wealth. Move 3 profits from panic. It's a mechanical response to the crash cycle. The current window cash is being raised. Buffett insider selling, tech CEOs. Gold accumulation is accelerating. Central banks and billionaires. Volatility bets are being placed. CDS, put options, VIX calls. Historical patterns show crashes happen 12 to 18 months after moves begin. That puts the next crash in late 2025 to 2026. The implicit fourth move, buying at the bottom. After trades 1, 2, and 3 pay off, the final move is to deploy cash and profits at maximum fear. Kennedy bought stocks after 1929. Buffett invested billions in 2008. Aman bought aggressively in 2020 after the pandemic crash. Practical takeaways for regular investors: you don't need billions or institutional access. You can execute simplified versions. Hold cash or short-term treasuries. Reduce stock exposure by 20 to 40%. Allocate 5 to 10% of your portfolio to physical gold or ETFs. Buy protection via put options on major indices. Small premium for potential huge payoff. Psychological preparation is key. When markets crash 40 to 50%, be ready to buy quality assets aggressively. This is where generational wealth is created, but only if the first 3 moves were executed properly. The 3 secret moves aren't insider tips, they're historical patterns that repeat every crash: cash, gold, and volatility. They've worked in 1929, 1987, 2008, and are active now in 2025. The choice is yours. Ignore the pattern and risk losing 30 to 50% of your wealth, or position yourself like the billionaires and protect, preserve, and profit. Subscribe now, because over the next 12 to 18 months, I'll track every signal, every insider sale, every spike in volatility, so you'll know exactly when to act. The 3 secret moves have been made. The pattern is repeating. The financial crash is coming. Position yourself before it's too late.